Hey there traders, it's Thursday and the tape is feeling the tug of multiple levers. There's a lot going on today. Trade signals flashing tension, gold pulling back, yield steady, and sector rotation quietly in motion. Today I'm going to walk you through the overnight tone, what yesterday's action taught us, the macro crosswinds that matter and we're currently experiencing, and where flows are moving. I've also got 3 clean trade setups for you going into the open. So then, let's get started. Firstly, overnight and futures pulse. Futures, S&P pretty much flat. Nasdaq down about 1% before the open on Thursday. And the S&P 500 also down 0.5%. Asia and Europe. Asian equities cooled after trade tension headlines. Europe steady but cautious. I've got a news article about that in a bit. Dollar and rates, the dollar's edging up ahead of inflation data and trade news. And lastly, commodities. Oil showing strength on supply shock headlines. Gold easing after recent surge. Gold now sitting at $4,120. Essentially, a cautious tilt. Momentum is possible but needs confirmation. So then, let's take a look at our news and talk about our tape recap. So what it taught us on Wednesday? Well, some tech and growth names showed resilience, but they lacked broad support. Breadth was narrower than ideal. Defensive or hybrid names held up better when risk sentiment wobbled. And lastly, commodity and energy complex getting a lift from supply shock headlines. Cyclicals may pick up if the trend continues. Therefore, traders, our lesson is that the market is still rewarding confirmation over conviction as always. You've heard me say it before and you're going to hear me say it again. So wait for the tape to show strength before leaning hard. Patience is a virtue. Alrighty, traders. Next is our macro levers. So let's take a little deep dive. First, trade and export tensions are rife. A lot of news going around today, but we won't get into any politics. Dollar and inflation path. The dollar is strengthening ahead of US inflation data. If inflation surprises, yields pop and risk reverses. Oil and supply shock. US sanctions on Russian oil firms have sent oil sharply higher. This could reignite cyclicals or pressure margins depending on development. And lastly, the gold pullback. So this article driving the news again today. After the big run, gold is easing. If the hedge demand cools, risk appetite could improve or reverse. So our takeaway, today's direction will hinge on whether trade shock, inflation risk, or supply headlines dominate. And lastly, traders talking about rotation and flow landscape today. Firstly, tech, AI, and semis. Trade headers make this group vulnerable. Look for leaders that hold support. Cyclicals and commodities. Oil strength may trigger rotation into energy or materials if demand outlook improves. Defensives and hybrid growth. With risk wobbles, names with stable cash flows and partial growth upside become attractive. Lastly, breadth signal. If small and mid caps and cyclicals join early, trend probability increases. If not, we may stay stuck in consolidation. Alrighty then traders, I've got 3 actionable setups going into the open on Thursday, and our first one is Texas Instruments Incorporated, ticker symbol TXN, and this is our semi-analog exposure. Why TXN? Well, if tech supply chain worries ease or export curbs are clarified, analog chip names often bounce ahead of broader semis. So for action then traders, long if TXN opens above its pre-market high with supportive volume and semiconductor ETF strength. Stop or exit below opening range low or VWAP fail. Lastly, scale, take partials on early gain ride runner if identity holds. Alright, secondly, we're taking a look at Exxon Mobil, ticker symbol XOM, and I'm putting in effort to ensure that I'm mixing up these stocks, giving you new ones to trade and take a look at. So this is our energy supply shock play. With oil rallying on sanctions and oil supply concerns, large cap energy names may lead cyclicals. So for action, long if XOM opens green and energy group XLE confirms strength. Stop or exit if oil reverses or XOM fails early structure. And for scale, take differentiated profits. Cyclicals tend to move in bursts. Our third and last stock going into Thursday is Procter Gamble, ticker symbol PG. This is our defensive premium consumer. Why? Well, in a week with trade and macro uncertainty, premium consumers and staples remain reliable anchors. For action, long on a clean open with PG above VWAP and retail consumer staple ETFs positive. Stop or exit if VWAP fails or consumer staples fade. And scale moderate gains. Hold a runner only if broader risk on flows materialize. Alright traders, one last graph to take a quick look at because there's a whole lot happening. Netflix lost nearly 10% before the open. Alright traders, talking about our execution filters and tape cues. I got 4 of them as usual. Futures versus VWAP test is the first key early bias. Secondly, breadth by 10 a.m. Eastern time. Broad means there's a higher probability trend and narrow means there's a higher likelihood of rotation or chop. Liquidity zones, opening range, prior day high low and pre-market pivots. Also, lastly, volume confirming price. Weak volume with a big move is suspect traders. Where there's smoke, there's fire, right? Alright, let's wrap it up for today, going into the open on Thursday. Here's your playbook. Trade, geo supply risk, inflation data, and rotation are all alive. TXN for semi-recovery, XOM for energy momentum, and PG for defensive ballast. Trade confirmations, respect structure, honest stops. Let the first hour tell you who's in control, and I'll see you at the bell. Alright then traders, let's execute our strategy. I hope you found the video helpful today. I'll see you again tomorrow. All the best now. Take care.